Hey guys, it's that Dividend guy coming at you with another Robinhood portfolio update. Happy Thursday. Hopefully everybody has had a great green day in the market. A GGD, you know I always wish the best for my viewers and subscribers. And speaking of subscribers, if you have not hit that red subscribe button yet, go ahead and do that. And hit the bell notification so you don't miss any of my uploads. I post a Robinhood update Monday through Friday. Thursday's update will be coming out on Friday because I'm actually at work already, and so I'm going to be posting this pretty late. Probably I won't get home until 2 o'clock in the morning. So this will come out on Friday, probably close to like 10 o'clock, and then I'll do Friday's update on Friday, probably around like 3 to 5. So, and you guys have plenty more content coming as well. I did a Graham Stephan video again. I did another Ty Lopez video. I have dividend increase videos, just a bunch of content. So, I have videos coming out every single day, multiple videos. And then on Saturday, I think I might have plans, but Sunday I will be recording a bunch of videos for you guys again. I'm trying to do batches where I record a bunch of videos on Sunday. That way I have video content coming out outside of the Robinhood portfolio, like news stories, stuff like that, plus the Robinhood content, so you guys get a lot more. But a lot more content from me and more diverse content as well, not just the portfolio. So with that being said, guys, content is coming on the way, but let's jump into the portfolio. Today, we're a little bit above 24K still, which is great. For the week, we're still up $884. For the month, we're up $2,200, up 10% still in the month. 3-month mark, we're up 22, almost 2,300, up 10%. For the year, we're up 1,400, up 6%, and all time since April 13th of 2018, when I was a baby investor, still am. I've only been at it a couple of years, but I'm up 17.5%, up $3,500. Up 17.5%. That's crazy. So let's take a look at the individual holdings here, starting with one of my personal favorites in the portfolio being Realty Income at about $60 a share. We have 15 shares, market value is $900. $45.38 is our average cost. 3.7% of the portfolio is in Realty Income. We are down $10 today, up almost $220, up 32% on Realty Income. And we have a dividend coming in of $3.51. Happy with that. Thing is, this is going to be the big real estate play for the portfolio. This is going to be the biggest real estate stock. This is my favorite real estate stock, and this is in my top 5 stocks on the market. I love their business model. I love the triple net lease. And I love the diversification within their properties and within their tenants as well. So I love the overall business, love the structure of the business, and for that reason, it will be my biggest player when it comes to real estate. I want it to, for the structure of it, I want it to be Realty Income to be the biggest, probably about 10% of the portfolio, maybe 12. Then I want McDonald's to be the next biggest player, probably be about 8%. Then Essex Property Trust, I want that to be probably about 5%. And then I want FRT at about 5%, so about the same as Essex Property Trust. And then I want Airbnb to be about 2 to 3%. So I do want to add Airbnb as well. So I want to have 4 real estate stocks being Realty Income, Essex Property Trust, FRT, and then McDonald's. And so 4 dividend-paying stocks, and then the last set will be the growth, which will be Airbnb, once the IPO kind of figures itself out. Next, we have Altria. We have 150 shares, $6,400 of market value. Average cost is $43.59. We have about 27% of the portfolio in MO, down $40 today, down $132 or about $130. Total. Not worried about it. Have a nice dividend payer in Altria. And this is my big payer, but this percentage will be going down because Coca-Cola will be a bigger percentage of the portfolio. Speaking of Coke, we have 20 shares that will be going up. This is one of my favorite stocks as well. Probably my second favorite behind J&J. I really like Johnson & Johnson. But we have 20 shares of Coca-Cola, a little more than about $1,000, almost $1,100 in Coca-Cola. That will be going up. Average cost is $51.26. 4.42% of the portfolio is in Coca-Cola, down $4.30 today. Up $37, up 3.62% as I'm drinking a Coca-Cola. Important that you use what you invest in, except Ultra. I do not use any of those. Well, actually, I do drink. I drink Budweiser, so yeah, I do have some of their product. but drinking a Coca-Cola right now. So, we do have a dividend coming in on the 15th from Coca-Cola. Remember, guys, they pay weird. They're 4, 7, 10, 12. So every Christmas, you should be able to expect a Coca-Cola dividend coming in. And mine's a little bit smaller than I'd like. I want this to be about a $15 to $20 dividend. But it is a nice little bump up for this set of months. Given 3, 6, 9, 12 is my smallest month, so it's nice that Coca-Cola does pay on kind of a different set of months. But that all will be going towards Coca-Cola or FRT, depending on if I have enough cash to cover it. I think I can buy 1 share of FRT or 2 shares of Coca-Cola, so I'd come out ahead with Coca-Cola, or I'd come out ahead with FRT. It depends. We'll see what I decide. I'm kind of up in the air right now because I don't get paid. I get paid tomorrow, but I don't get paid by my stocks until the 15th, so I have a little bit more time to figure it out. Next, we have FRT. $91. We have 1 share of this king. We have $91.34 for market value. Average cost is $113.40. So this would definitely be the stock I'd be focused on instead of Coca-Cola, because I'm down so far, because I have a cost on average opportunity here, and if I have enough cash, I will put it towards this instead, because I lower my cost basis, my dividend yield goes up. So I like it. We have, and it's real estate, so and that's, I want real estate to be about 25 to 50%, probably about half of the portfolio. But we're down $22, down 19%. Not super worried about that. Love the company, love the dividend growth history, love the diversification of this company. I don't like it as much as Realty Income or McDonald's. It's probably my least favorite out of the stocks that I hold for real estate. But given the status and the good dividend growth rate and consistency, it will be a pretty big portion. Like I said, about 5 to 8% of the portfolio. Next, we have Lowe's. This is one of them that took off like a rocket, and it ticked me off. I should have bought more. This is the one that I'm kind of thinking about selling, but I don't want to because I did a really good dividend increase this year and holding shares. It's a dividend king. They paid a dividend and increased it every year that they've been on the stock exchange. So I don't want to get rid of it, but the reason, as you guys can see, is I'm up big on it, and that's a lot of growth, which is great, and appreciation, and a lot of growth with dividends, which is phenomenal. But the problem when the stock takes off like this is I'm not comfortable buying any more, boosting my average cost up by $60 a share. So we have 2 shares of Lowe's, $322 for market value. Average cost is $100.86. 1.34% of the portfolio is in Lowe's. Up about $2 today, up $120.40 total, up almost 60% on Lowe's. So guys, I love Lowe's. I think it's a great company. I like Home Depot as well. I just like Lowe's better because the dividend growth history is a lot longer. But I don't like the price. I don't want to buy anymore because it's so inflated right now, according to my prices, not the market. This is the same issue with AbbVie. Like, I bought it when it was low, and it held. I held it now, so I've held it for I think 6 months, 6 or 7 months. So it's taken off, and I got the dividend increases, which is great. But I can't boost up this position at this current cost. So like if you're getting into it, it's not a big deal because you can cost down average, right, at 161. But if you buy a couple shares of a stock and it takes off as a dividend growth investor, that sucks because then the money sits in that holding like it did with Target, and you can't allocate more funds towards it. So you have to determine, this is where I'm at right now, if you think Lowe's is worth it. I think it's a great company. I want to hold it in the portfolio, but is the dividend increase going to be worth it on such a small share count? That's what I have to figure out, because if it's not, then I need to reallocate those funds and put them towards something else. So that's kind of where I'm at with Lowe's. Next is AT&T. It dropped a little bit, down still about 30, 50 a share. 126 shares, $3,800 of market value. $29.68 is our average cost. 16% of the portfolio is in AT&T, down about $90 today, up $138.28, up 3.71%. So I would not be surprised to see AT&T stock price start going up because there was a big hedge fund that bought into it a while ago. I've been a long-term shareholder of AT&T for a while. Since I started investing, this is one of the first stocks that I ever bought. And I'm a long-term investor, so I had a little bit, I was a little reserved on buying shares of it at first just AT&T in general, but when I saw the Warner acquisition, I was actually going to buy Time Warner, which was I think $42 a share. And when they were acquired into AT&T as a business, now they're Time Warner, AT&T Time Warner. It's still $30 a share, so you're getting like a $70 company because individually Warner and AT&T were about $70 if you combine their stock price, and now it's a $30 stock. So it's like they acquired it and they went down. So which I think. I think it's a great pairing for the companies, honestly. I think AT&T's phone service goes very well with the Warner content because they can offer Warner content exclusively to AT&T shareholders, or excuse me, to AT&T users, and they can also, which technically would be like an HBO on demand or HBO Max or whatever streaming service they decide to offer, they can get with AT&T's phone service. Next, we have AbbVie, which we have 60 shares. Warren Buffett just bought this company. $6,400 of market value. Average cost is $72.22. Bought it during the acquisition, and it took off like a rocket. About 27% of the portfolio is in AbbVie. We're down $61 today, up $2,100, up almost 50% on AbbVie. Next, we have PBCT, my bank stock. 14 shares, $185 of market value. Average cost is $10.90. About 0.7%, 0.8% of the portfolio is in PBCT, down 7 cents today, up $32 total, up 21% on People's United Bank. This is one of those that I bought because I couldn't afford anything else after I bought AT&T and after I bought the shares of AT&T. When I got paid from Altria last time, I needed to find a good quality stock that was less than like $25 so I could buy 2 shares, which is exactly what happened with PBCT. Initially, I bought 2 shares of it, and then what happened was Altria actually paid after AT&T's X date, so I couldn't buy AT&T. There's no point in it because it wouldn't increase my payout for next month, which is what happened so this is last month in November. That's what happened. So I got paid the dividend, but I couldn't use it to allocate it towards the next month's payout. So what I did instead was I bought PBCT because their X date is the 31st. So I could use Altria's dividend, which was paid on like the 19th, and then AT&T's X date was the 18th, so it was literally a day after. Altria would have needed to pay me on the 17th in order to use that money to buy AT&T on the 19th, so it just was like one day off, and so I couldn't buy AT&T, so I bought People's United instead, so I like 4x my share count with Altria's dividend, and I'll continue to do that. That's going to be kind of my goal here is if Altria's dividend works for AT&T and it's still below or around my average cost, the most I'd pay for it's about $31.50. So if it's still around that cost, I don't mind buying it because I have 126 shares sitting at like around $30 a share. But if it gets up to like 32 or higher, I'd be putting all the money towards PBCT. So that's kind of the goal here. PBCT, I don't want it to make it sound like it was kind of like an afterthought investment, because it wasn't. I did a lot of research on it before I bought into it because I got burned so bad by Wells Fargo, but I'm happy I bought it. It pays the same dividend as Bank of America. It has a better growth rate than Bank of America and a longer track record of increasing dividends. So I'm happy I bought PBCT, and I will be allocating the dividend for the month prior to it if I miss AT&T's date or if AT&T is not a value for me. Next, we have J&J, my favorite pharmaceutical company, my favorite stock, actually, when it comes to dividends. We have 2 shares, $3.05 for market value, $1.35 for an average cost. 1.27% of the portfolio is in J&J. We're down 76 cents today, up $33, up about 12.5% on Johnson & Johnson. Then 3M, we have 2 shares, about $350 of market value. Average cost is about $150. 1.4% of the portfolio is in 3M. We are down $3.06 today, up $52.97, up 18%, and a dividend of about $3 coming in. Then we have Walgreens, close to king status. We have 6 shares, about $250 of market value. Average cost is about $40. 1% of the portfolio is in Walgreens. That will be going up. If the stock price goes below, I'd say about 30 $5 is about where I would want to purchase it at. To lower my cost basis, that's about where I want it to be at. We're down, not even really, we're up today, excuse me, and we're up $11 total, up 4.5%. Then a dividend coming in of $2.81 from Walgreens. Then the big payer for this set of months being ExxonMobil. We bought 2 shares of them last month with AT&T's dividend along with AbbVie's dividend. So we increased our share count there and increased our dividend income as well. So we have 86 shares of ExxonMobil now, $3,700 of market, around $3,800 of market value. $52.74 is our average cost. 15.7% of the portfolio is in ExxonMobil. We're up $102 today, down about $753 total, which that looks like it's bad, but it is not as bad as it has been, so I will take it. We're down about 16.5% to 17% on ExxonMobil, still not even close to how bad it has been, so happy about that. And we have a dividend coming in of about $75, which we can't complain about, which that will be put towards shares of FRT or Altria. Maybe even it depends on kind of what I feel like buying when the 15th comes around. So we have a few days yet still to figure out what we're going to do with that money. But I'm excited to see the dividend payment. Then we have Aflac at $45.50. We have 1 share at $45.50 market value. Average cost is $35.75. Portfolio percentage is 0.2%, but Aflac will be a bigger portion of the portfolio. Love Aflac. Think it's a phenomenally run company. Payout ratio is great. Dividend history is there, so it has everything I look for in a stock, and it's in a sector that I'm very, very bullish on. We are up 33 cents today, up 9.70, total up 27% on 1 share. So I will be buying more of Aflac stock. Currently, it's too close to the high for me to buy it. Honestly, this is one of those that I'd probably just take it as is and just increase the position because I'm really bullish on Aflac. I know ExxonMobil's a better buy, so I would focus on Exxon just because it's so low, but my goal stock is Aflac. Next, I'm going to go through and just say which ones are my goals and which ones I'm actually going to buy. So my goal stock is Coca-Cola, but I would be buying FRT because it's undervalued. Next, my goal stock is for the next set of months is AT&T, but I would be buying PBCT if AT&T is overvalued. And then, of course, my goal stock for the last set of months is Aflac, but if ExxonMobil is still that low, still about $10 below my average cost, I have to focus on ExxonMobil because Aflac's $10 above my average cost, so I don't want to do that. I wouldn't be purchasing Aflac. It would be better to purchase ExxonMobil at a suppressed price and get a higher dividend. Then we're going to go through the watch list real quick, starting with PepsiCo. So at $144, it's overvalued for me. I would want it to be down to like $130 a share. Is about where I would want the stock to be at for me to purchase it. Next, we have Kimberly-Clark at $134. Definitely buying it there. $24 of upside. So definitely buying Kimberly-Clark. Love the company. Love the product line. Love the dividend consistency. Definitely want to be buying some shares of Kimberly-Clark in the near future. Procter & Gamble at $135. It's one of my favorite companies. It's in my top 5 of all time. But I would not be buying them at that price with $10 of upside. It's just not enough. Essex Property Trust below 300 is a steal. It's one of my favorite real estate stocks. And it's a dividend aristocrat, so I really want to add that, but I know it's pretty expensive, and I got to focus on the emergency fund, but I will be purchasing that relatively soon. Then Black Hills is my utility play for the portfolio, sitting at less than $60. I know the 52-week high is around 85, 87. So more than $20 of upside there on the stock. Definitely want it for the utility play. Then McDonald's at $207. Yeah, about more than $20 of upside in the stock, so definitely want to buy McDonald's there. And as I said, this will be a pretty big position. Probably the largest position for 3, 6, 9, 12. This Aflac and this will be very big, along with J&J. Then we have Disney. Disney at $150 is too pricey for me. I want to get it around my original cost basis of like $120, something like that. Yeah, around $120. share for Disney. And then I switched out Apple for Berkshire, and I will be adding Airbnb once it becomes available on Robinhood. Berkshire, no brainer. Love this company. Heavily diversified. Buffett's running it. They just sold out of a bunch of their banks, which I liked that he did that. And he bought pharmaceuticals. So I like the pharma industry and understand it way better than I do banks. So I am a lot more comfortable holding Berkshire. And I've watched extensive videos on the history of Berkshire Hathaway and the investments in the insurance industry, the food industry, just everything. It went back to like the 60s, so I've done a lot of research on Berkshire, and I want to own Berkshire Hathaway. I do want that to be probably in the growth portion of the portfolio. That will be the biggest investment, no-brainer investment in the entire portfolio when it comes to growth. Overall, I want Berkshire to be about 10 to 15% of my portfolio as a whole. And then Airbnb will be the last one because it's going to be my real estate play for the portfolio. So, guys, that'll round out the portfolio update for today. I'm super excited and pumped up. We're still above 24K, so can't complain about that. We have dividends coming in on the 15th, and those will be allocated to either O, MO, or FRT, as long as I think it's probably going to be FRT, to be honest with you, especially if it stays as suppressed as it is. I can't pass up that opportunity. But I am getting paid on Friday. Every paycheck is going, like half of it's going towards my emergency fund. I want to get an emergency fund built up of about 3 to 6 months. So I should be back to investing and allocating cash towards the market by the end of, I want to say, March or April is my goal. So until then, dividends are just going to be reinvested into the next month, as I have been doing. So thank you guys so much for watching. Remember, I'll have an update come out. This is Thursday's numbers, so tomorrow's update on Friday will come out probably about 7 o'clock at night, just because this one's going to be coming out around noon. So thank you guys so much for watching. Remember to hit the subscribe button, and I'll see you guys in the next Robinhood portfolio update. Take care, guys.